Welcome to our latest market performance overview. Today, we'll examine recent developments across key financial assets, including currencies, commodities, and equities. Let's start with the dollar index. It remains within a descending wedge pattern and is now just below the monthly support level at $100.60. We could see a test of recent lows around $100.21. Keep an eye on potential downward movement towards the 161.8% Fibonacci extension projected at $98.81. Next, we look at the dollar versus the Canadian dollar. This pair is approaching weekly support at 1.3436, which may lead to new lows. Similar to our outlook for the dollar index, we anticipate a new pattern forming at 1.3369, aligning with the 161.8% Fibonacci extension. Now let's discuss the dollar versus the Norwegian krone. This pair is currently testing the monthly support at 10.425. A breach below this level could open the door for a move toward 10.295, which is the default target for a previously identified head and shoulders pattern. Moving on to the dollar versus the Mexican peso, this pair is showing signs of weakness. It failed to follow through on an inverted head and shoulders pattern and has broken below the support of a consolidation flag. This breakdown suggests a potential decline towards the previous support at 19.059. Now, let's talk about gold. We are witnessing new all-time highs today, hovering around $2,653 per ounce. We anticipate a pullback to help identify future patterns. Gold has successfully reached multiple targets set for medium and long-term patterns, including a significant cup and handle formation that spanned from September 2011 to August 2020. Next up is silver. Following our expectations, silver is currently breaking out of an ascending wedge and has surpassed established resistance at $31.43. Additionally, it has cleared the weekly resistance at $31.75 and is poised to test the monthly resistance from May at $32.51. Moving on to crude oil, despite the significant drop in the dollar versus the Canadian dollar, crude has not mirrored this movement. It remains constrained at the minus 50% Fibonacci retracement level established earlier this week, still slightly away from the target for the inverted head and shoulders pattern below, which stands at $74.60. Now let's take a look at the SPX 500. This index has traded within a tight range over the past 5 sessions, oscillating between the support level at $5,682 and resistance at $5,747. It continues to show resilience amid negative sentiment, indicating positive signals for the market. Next, we examine the German index. It is approaching the established resistance at $19,047, potentially validating a cup and handle pattern. Confirmation of this pattern could drive the DAX towards $19,670. Earlier this week, we anticipated a possible head and shoulders formation for BUNDs. However, they have shown resilience, maintaining above a key support trend line established since May. A breakout above resistance at 135.45 could trigger a move towards the untouched monthly fractal at 139.25. Lastly, let's touch on bonds. They are holding above a support trend line that has been in place since early summer. We anticipate a retest of the previous resistance at 115.03, which was formed in August. That wraps up our market performance overview. Stay tuned for more updates and don't forget to subscribe for the latest insights.